Hi, everyone. Thanks for joining the DigiShares webinar. Today's topic will be tokenization in Southeast Asia. This is Yaping Wen from DigiShares, and I will be your host for today. This webinar is a part of our webinar series called Real Estate Tokenization in Practice. This webinar series, we explore different topics and aspects relating to the real estate tokenization. Our goals are to get more people to know and understand more about the real estate tokenization, especially in Southeast Asia, which is a fairly new market, and to educate them on how to put their assets on the blockchain. We try to keep our audiences up to date on the latest news and changes in the industry. At the same time, we present them with real-life cases, challenges, and solutions to these hurdles. This time, we'll be focusing on tokenization in Southeast Asia, and we have invited over a few guest speakers for today's session from very influential companies in this industry to share their knowledge and experiences in this segment. So today we have Nicole Lee, the head of private client group from ADDX Singapore. We have Pooja Singhar, associate director from Forte Law based in Singapore as well. And we have Sheshan Krishnamurthy, the CEO of Future Safe from India. But before we move ahead with the sharing session from our valuable speakers, we have our CEO of DigiShares, Cloud Scanning. We would like to kickstart the webinar with a very welcoming message. So Cloud, over to you, please.
Yeah, welcome everyone. And I think people are still coming in, so it's okay to hold a bit maybe. And I can also see my shirt is not good for the camera here. Welcome everyone, and thank you for participating today. A couple of speakers have canceled on their presentations today, so the webinar will be a bit shorter than usual, but we'll still end with a panel at the end. And we'll probably repeat a webinar with this focus in the near future in order to get the last speakers into the webinar as well. But thank you very much also to the speakers that will participate today, that are all either partners or clients of us working in the ecosystem of security tokens globally. My name is Klaus. I'm the CEO of DigiShares. DigiShares is basically a provider of white label technology solutions for tokenization of real world assets. So we can be viewed as a kind of gateway into the tokenization ecosystem. Our system can be used as a standalone solution to tokenize your assets and sort of facilitate investor onboarding, crowdfunding, compliance with share cap table management, investor management, distributions, and so on. And we also have a small internal walled garden marketplace, which is a bulletin board where you can trade, or your investors can trade peer-to-peer without counterparty risk on the chain. And of course, our solution is also highly integratable and customizable, and can integrate, for instance, with ADX, who's presenting here today, if you want to have more liquidity for your asset. We are also launching our own sort of focused exchange on the vertical that is real estate, called realestate.exchange, and as a separate brand, separate business unit. And we conduct this webinar series and been doing it now for a couple of years, doing 7 or 8 webinars every year in order sort of to educate and motivate the surrounding ecosystem of real estate developers or asset owners, fund managers, and so on, to learn about tokenization, learn about the value provided, and sort of get inspired to hopefully start their own projects. For us, it's about getting the pieces of the ecosystem together, getting the legal, regulatory sort of issues resolved, and providing sort of the different elements of the value proposition, including liquidity, automation, digitization, and compliance. That is sort of the promise of the tokenization ecosystem. Today, we are focused on Southeast Asia, which is not the largest market for us, but a market that is coming up fast, and where we also see a lot of interest from regulators in order to sort of provide guidance for local companies in order to find out how to tokenize in a compliant manner. So we are working with a number of clients in the region to sort of get through the legal process and become enabled to tokenize assets locally. Tomorrow we have a similar webinar focused on Latin America, which is also for us a new and upcoming region for tokenization, with its own issues and its own sort of characteristics. And in May we have a webinar focused on liquidity, where all the world's sort of leading security token exchanges will be speaking. And then we have a break over the summer, and in the fall we'll have new webinars, 4 or 5, I think. We also travel out and meet people locally. Next month in May, the middle of May, we'll be in Palo Alto, Silicon Valley, doing a masterclass, sort of as a deep dive into tokenization, the use cases, the industry, the value proposition, the barriers to adoption, and so on, and sort of helping people locally to understand how they can get into this field. We have announced a number of integrations recently, so we've integrated with Fireblocks, the Fireblocks wallet for a more compliant, high quality and secure self-custody solution, and also easier access to the Fireblocks network of institutionals in general. We've integrated with Dwolle for online, for sort of fiat-based payments in the US market. We've integrated with a company called Fortress Trust for custody in the US market. And then, yeah, we are going to announce a couple of more integrations over the next few weeks. We are also working on the real estate exchange, which is focused on the real estate vertical, of course, and expect to launch it within a couple of months once the licenses are in place. And we're doing our own capital raise right now, Reg D and Reg S from our US entity, DDShares Inc. It's open another couple of weeks, and information about that can be found on our website. So that's basically what I will say for today. I'll give back the word to Jobby, and hope that everyone will have a good few hours. Thank you.
Thank you, Klaus. So we will move ahead with our webinar for today. So the agenda for today, we will start with Nico Lee, the head of private client group from ADDX Singapore. She'll be sharing about the opportunities and challenges of tokenization in Southeast Asia. And the next, we will have Puja Singhar, the Associate Director from Forte Law Singapore, to share about the regulations in Singapore and the rest of Asia. And then last but not least, we have Sheshan, from the CEO of FutureSafe, to share about an overview of the tokenization in Southeast Asia. At the end of this webinar, will be open for the fireside chat, and you can submit any questions to the Q&A for our speakers to give you answers. Okay, so now we move ahead with the sharing session from Nico Lee, the head of private client group, ADDX. Nico Lee is the head of private client group at ADDX Singapore, where she's responsible for helping individuals and corporate investors gain access to private markets and investment alternatives. Nico has over 12 years of experience in the wealth management space across a variety of roles at the UBS, where she was previously had investment, content, activation, and strategy for APAC. So over to you, Nico, please.
Thank you so much, Yappy and Klaus, for inviting me here to speak today. I'm really excited about this topic of tokenization in Southeast Asia, which is really, really close to the heart of what we do at edX. I'm Nicole Lee, and I lead the direct-to-consumer business at edX, a Singapore-based global digital securities exchange that fractionalizes and tokenizes private market and alternative investments. We are fully licensed by the Monetary Authority of Singapore as a registered market operator and a capital market services provider. And our shareholders include some of the leading players in the region, including SGX, UOB, the Stock Exchange of Thailand, KB Securities in South Korea, and Tokai Tokyo Financial Holdings in Japan. Now I'm going to split my presentation into 3 parts. First, about the financial context. Second, about what we do at edX. And thirdly, about the tokenization landscape. But before we get to the juicy part about tokenization, let me start off with some traditional financial context. Because as techy as tokenization sounds, a lot of it is based on TradFi underlyings. Now, the world has changed. The world has been disrupted by high interest rates and high inflation after more than a decade of low rates and easy money. It has been disrupted by advancements in technology like blockchain and AI. It has been disrupted by the Russia-Ukraine war and COVID. Things have changed, and that has a profound impact on what we invest and how we invest to meet our short and long-term goals and needs. Now, the sell-off in the public equity and bond markets in 2022, along with unpredictability in Fed monetary policy, has left many people wondering if there is any place left to hide and invest. Of course, the crypto winter and the collapse of FTX have significantly dampened risk sentiment, and the concerns and drama in the US banking sector has added to that as well. But despite a challenging 2022, where no investment, public or private, was spared, did you know that private markets still outperformed public strategies across the board, and in some cases by well over 10%? And did you know that if you had invested $1 5 years ago in 2018, private equity would have returned the highest today at about $2.20, followed by private real estate, private credit, and finally public equity at about $1.20? What's also interesting is that historically, private equity outperforms public equity every time, even in down markets and during global crises. So, how does this all relate to what we do at edX? edX has essentially one mission: to democratize or provide greater access to normally inaccessible investments like private markets and investment alternatives. We believe that every investor deserves the ability to invest beyond purely public markets and to be able to build a diversified alternatives investment portfolio that comprises of private equity, private credit, private real estate, hedge funds, and even alternatives like wine without actually breaking the bank. As the growth trajectory of public markets become much more limited, and as companies stay private for longer, on average around over 10 years, or as more private companies take a much longer time to go public, a significant portion of value creation takes place when a company is private. Additionally, many of the structural growth opportunities out there, like in select healthcare or technology opportunities, they are increasingly becoming available only within the private market spaces. Many wealth managers out there are also advocating that alternatives are no longer an alternative, and it should be in every person's global investment portfolio to enhance your returns. So what do we mean by making private markets or alternatives investing more accessible? Now, here's a little bit about what happened in the past. For years, big institutional investors like pension funds, endowments, sovereign wealth funds, and ultra-high net worth investors have had the financial ability and access to include private markets and alternatives into their overall investment portfolio. This helps them to, number one, diversify their risks, number two, add differentiated sources of returns, and three, enhance their long-term risk-adjusted returns. But wait till you hear the usual ticket size to invest in these assets. It ranges from $250,000 to $1 million, and sometimes even $5 to $10 million for direct investments, meaning that an individual investor would need to have an overall portfolio of between 20 to 50 million in order for you to have a diversified alternatives portfolio that makes up about 20% of your portfolio. Now that's a lot of money. At edX, what happens is that you can invest for as low as $1,000. That's 1,000 times lower than the 1 million ticket. And this means you can gain access to high quality alternatives investments and more easily build a diversified portfolio across different private assets, hedge funds at much smaller investment amounts. So how do we make this all happen? In one line, we're reducing the barriers historically faced by players in the private equity value chain, which previously locked out smaller investors. How do we do it? Number one, we fractionalize the underlying investments like private equity funds, private credit funds into smaller sizes, and we use the help of blockchain and smart contract technology to tokenize these assets, making some of these processes more efficient as a result. Number two, we're connecting the entire marketplace digitally, including investors, issuers, wealth managers, and embedding services like custody. At edX, we deliver end-to-end from issuance to custody to secondary trading of digital securities. Number three, we're saving investors time. The entire investment and subscription process for an accredited investor to a private equity fund, for example, is pretty seamless and digital. Typically, subscribing to these PE funds entails considerable paperwork, hundreds of pages of agreements, multiple signatures, and detailed instructions. After subscription, investors on edX will then legally own the respective security tokens, which they will see in their edX wallets. Security tokens are simply a digital representation of the underlying investment product. In our case, it could be a private equity fund or a hedge fund, for example. For the issuer, what edX does is to aggregate the funds raised, which are directly transferred to the issuer. So what's in it for the issuers? For issuers or companies looking to tokenize these investments, this route helps them to, number one, broaden and diversify their investor base beyond institutional and high net worth investors. Number two, raise capital. We have good successes in, for example, having SGX listed companies in the areas of short-term commercial papers, for example. And number three, to prepare themselves for a future digital ecosystem that is built on blockchain. Now, finally, I'm going to end off with how we see the tokenization landscape more generally. In 2022, edX launched a white paper with Boston Consulting Group that estimates that asset tokenization will grow 50 times from today to become a $16 trillion opportunity by 2030. This translates to about 10% of total GDP, and it includes assets like funds, bonds, unlisted equities, infrastructure projects, etc. Token issuance is now regulated in the UK, the EU, Switzerland, and the US, as well as the UAE, and closer to home in Asia, Singapore, Hong Kong, and Japan are most favorable. In Singapore, the MAS recognizes digital securities as securities under Singapore law, but there's still some way to go for countries in Southeast Asia and South Asia. But what we do observe on the positive note is that stakeholder sentiment on tokenization is turning more positive. People are getting more open and aware. Of course, the crypto winter in 2022 did not help overall sentiment last year into this year. People are getting confused between cryptocurrencies and the underlying blockchain technology. But one thing it did help, though, was to help people refocus on channeling capital to viable blockchain applications and DeFi projects, which have legitimate business models and inherent value. I'll stop here for today, and I'm happy to take any questions later, but back to you, Yappy and Klaus.
Thank you, Nico, for your valuable sharing. So do we have any questions that you can submit from the Q&A so I can check with the speakers? All right, if you don't have any questions, or if you think of any questions later on, you can always submit it and we can have it clarified during the fireside chat. We move on to the next speakers. We have Pooja Singhar, the Associate Director of Forte Law Singapore. Pooja is actually an international lawyer based in Singapore, a corporate finance specialist with the unique ability to advise clients in both the traditional and new age economy. She has closed over 100 transactions in the US, Europe, and Asia, and has a wide range of experience within the digital economy, having advice on everything from ICOs, STOs, IEOs, and most recently, NFTs. She has also advised on the setup of investment funds in the digital token space. And Pooja has spoken extensively on legal and regulatory issues at panel events within the blockchain industry. Recently, she has also started penning down her thoughts on the interplay between the traditional and new age economy on Medium under handle Singha Pujar. So over to you, Pujar.
Thanks very much, Yapi. Pleasure to be here today. Yapi's given quite an introduction, so I will just dive in. I don't actually have slides ready, but if you need more detail, please feel free to contact me offline after the event. So I just wanted to give an overview of the regulatory regime regarding security tokens, specifically in Singapore, but also touch upon some general macro perspectives on what's happening elsewhere in Southeast Asia. So I think, as Nicole has already alluded, the Singapore remains a very key and important center for the development of the digital assets industry in Singapore, in Asia. So when I did this webinar for DigiShares, I think it was maybe 2 years ago. It's interesting. I think there were a lot of questions around how the Singapore regulatory regime was going to work for security tokens, whether there would be some sort of exemptions available because real estate is not considered a capital markets product under traditional financial services. I think now we've come a long way from that kind of ambiguity. I think in essence, if you're kind of doing business relating to an investment product, then whether the investment is digitized in the form of a token or not, stating the obvious, traditional financial services regulation does apply, and you do need to get a license. So now we've seen a number of sort of licensed security token platforms in Singapore. Of course, ADDX is one of them. And there's sort of two levels of regulation that it's important to know about. One is if you as an intermediary are effectively carrying on the business of dealing in securities, be it a security token or not, then you would need a CMS license from the Singapore Financial Services Regulator, which is the MAS. That's only part of the story, however. If you are then going on to facilitate secondary market trading in the tokens, then there's another kind of license that applies, which is a recognized market operator license. And again, this is a license that's granted by the Financial Services Regulator, which is the MAS. I mean, lots and lots of questions being asked in terms of how difficult is it, what's the process, what's the timing. I think I'll kind of save that detail for later if anybody has questions. I think I would just make a few broad brush observations. Obviously, Singapore being very sort of high watermark jurisdiction in terms of this regulatory regime, there's going to be a lot of scrutiny in terms of whether they're fit and proper people behind the enterprise. There's going to be a lot of scrutiny around what are the compliance controls within the firm that's applying for the license. The word on the ground is that these days there's a lot of back and forth just in terms of what the business plan is and where security tokens in particular fit in. So it's certainly an achievable process, but it is a process. So it comes with its own pain points from a Singapore perspective. I think the other practical insight I would share is that obviously with Singapore becoming a very popular, increasingly popular jurisdiction for wealth management, asset management, etc. I think there's a number of such applications in the queue. So I think the timing for actually getting a license processed is probably a little bit more bearable now than it used to be. And of course, getting licensed is just one part of the process, the first step in the journey. I think on an ongoing basis, you have to be able to comply with the ongoing regulations. So that's kind of some overarching comments I would make in terms of being licensed in Singapore, in terms of being a platform for the issuance of security tokens or facilitating the secondary trading of these security tokens. Now I'll just pause there and share a couple of observations on what's happening in the rest of Southeast Asia, just very high-level perspectives. Now, I think some of what I said 2 years ago still stands, in that there seems to be a continuing conflation between security tokens and cryptocurrency, and obviously both are not necessarily the same. And I think some regulators in Southeast Asia have particularly struggled with this distinction, and obviously this sort of crypto winter, crypto scandals haven't helped. So I think some of the messaging has around security tokens has gotten a little bit. Some of the messaging hasn't quite been on point in several Southeast Asian countries, particularly the more sort of emerging market type countries. But you do see, I would say, a sort of competition sort of continuing to emerge in terms of which jurisdiction is more favorable to security tokens. I think Hong Kong has generally sort of emerged from a relative sleep, I would say, in the last few months, to really very actively woo for the wealth management and asset management business from Singapore, and that includes security token related business as well. So there's a lot of buzz around putting in place Hong Kong domicile structures. There's been a big focus by SFC, which is the Hong Kong regulator, in terms of developing Hong Kong as a center for tokenized green bonds. So again, that's been an interesting trend. And I think generally the Hong Kong regulator has of late been has really been encouraging fintechs and other early stage businesses to come in and sort of have a dialogue with it in terms of what are the changes that they want to see in the industry, and whether there's a specific use case regarding tokens that they want to bring to the regulator's attention. So I think they've just been, I think, far more accommodating just in the last 6 months than they perhaps have been before. So I think it's going to be very interesting to see how that pans out, because that also kind of has a bearing on the Hong Kong versus Singapore ongoing debate that there always is. So then moving on from Hong Kong, just briefly touch upon Thailand. I think the Thai government is also, I think, very keen to embrace the Web3 fund. I think there was a general feeling that they sort of that they didn't leverage the Web2 phase as much as they could have, so they're keen to leverage the Web3 phase. So we have seen at least one public example of a security token being done, which was, I believe, in the real estate space. I mean, there may be more, but this is the most high-profile one. This was done further to changes that were made in the Thailand regulations, whereby the Thailand regulator, where the Thai regulator specifically given jurisdiction over tokens that were issued on the blockchain. So I think that's again an interesting development. It's also interesting because, actually taking a step back, even if you look at a number of the platforms that operate out of Singapore, actually I would say there's a pretty equal mix of them having Singapore-focused assets and non-Singapore focused assets within their remit. So some of the platforms in Singapore have done deals focused on US assets, but a number of them have been focused on assets generally across Southeast Asia, including real estate. So I think, again, it's going to be interesting to see how this regulatory arbitrage pans out. Then just moving briefly on to India. Again, lots of interest around tokenization of real estate. Unfortunately, the rules are not very clear in India in terms of whether you can do that. I think the general view is that you do need to be regulated or licensed by SEBI, the Indian market regulator, to broker these kind of deals. Certainly to run a secondary trading platform, but there is certainly a shade of gray, and I've been informed that there are a few players operating in the shade of gray. but obviously that isn't ideal. So I think regulatory clarity would be very, very helpful in this context. The challenge in India in particular, I think, is again, there's a little bit of this mix up between the cryptocurrency messaging and an understanding of how this is not really the same as non-crypto security tokens. But I think, slowly but surely progress is being made. But I think there's also the other issue, which is that, when you introduce this new creature, which is security token, sometimes you have to really look at it, look at the regulatory regime from a holistic perspective. So it's not just, some changes that you need to make to the financial services regs. You also need to look at ancillary regs, which could have a very large impact, such as tax regulations. And we see this happening in the cryptocurrency space, where the market regulator doesn't seem to be in sync with the tax regulator. And sometimes what happens is that, when you have certain kinds of tax exemptions available for investment, traditional investment products, just because of the way that the regulations were written, many decades ago, they don't automatically, within the definition, capture digital assets. When obviously digital assets are nothing but another version of an investment product. So I think it's those kind of holistic changes, which kind of cut across different legal categories that have been a bit slow, I think, across Southeast Asia. But slowly, but surely they are certainly coming, and that will, I think, certainly enhance, more of these local tokenization projects as well. I think just stepping back from that, I just wanted to say that, separate from the regulatory and licensing piece, I think I hear many versions of the same questions from security token issues. Which jurisdiction is the best for me to set up in, is obviously question number one that I get. And I think just while I've said this before, I think I never get tired of repeating it. I mean, which jurisdiction you set up a security token issuer in is only part of the problem. If you're doing a capital markets issuance, what matters is not just the jurisdiction from which you are housing the vehicle that's issuing the securities. You need to think about the location of each investor and which jurisdiction they are based in. So by definition, a non-domestic security token issue is an international capital markets issue, and you need to be mindful of cross-border rules as well. No matter where in the world you are, you need to be mindful of US securities laws. So even if you're not targeting investors in the US, you need to make sure that you fall within the regulation S exemptions, so that it's very clear that you're not somehow indirectly targeting investors in the US, because that has its own bells and whistles attached. I also get asked, questions around what kind of documents do I need, how many documents do I need, and it's all going to be very simple, right? Because it's all digital. I mean, to an extent, yes. And I think, as Nicole alluded to, obviously, having these sort of platforms, including DG Shares, is very helpful to have this sort of seamless process for many of the sort of cookie cutter parts of this whole journey. So certainly legal documentation, number of operation processes can be streamlined and made more efficient, made more cost effective through a technology-based solution. And I think some things, can't be sort of, fit into these nice little peg holes, even though we might want it to. So, for example, an information memorandum is pretty much something I would recommend for every single token offering. Even though it's a private offering, it's a document in which you not just describe your project, but you also set out this important information on risk disclosure. And again, it's important that that's the final document that an investor makes his or her decision on, rather than what you might or might not have said at a pitch meeting or a casual roadshow in a sort of off-the-cuff context. So I think some of these, international capital markets basics, I think, do get missed out in this rush to streamline everything through technology. So I think, unfortunately, securities laws in a number of countries are still stuck in the 1950s. But while we have these laws in the books, I think we just need to make sure that all of these sort of well-known tips and tricks from the international capital markets world are equally deployed in the new age as well, because some of it is not even that hard to do, but you do need to go through certain steps and hoops, and that will make sure that you're protected from liability to the maximum extent possible. So I think I'll conclude with that. Happy to take questions at the end of the session or whenever is convenient.
All right, thank you, Pooja, for sharing. I do receive quite a number of questions for Nicole and Pooja. I will just start with the first question for Nicole. Do you create an end-to-end tokenized product, including legal setup for these products, companies, or you only work with already established entities to offer them an investment products?
Thank you for the question. I think that was John. Thanks for the question. I think we do end-to-end in terms of custody, issuance, and secondary trading of digital securities. But in terms of the tokenized investment products itself, I think at this point in time, we're taking a more practical approach. We're currently working with established fund and asset managers and select companies and issuers to tokenize these funds or investment products, or even commercial papers, which are like private bond placements, for example. So the short answer to your question is we're tend to work more with established fund and asset managers versus sort of doing the products ourselves.
All right, so I hope that answers your questions. And I have another question for Pooja. So Dolly Austin asking, are asset tokenization legal in India, UK, and Singapore for properties, especially with reference to incubators and co-working spaces?
So I think it really depends. I mean, when you say your tokenization is with reference to incubators and co-working spaces, what exactly is the token going to represent? Is it basically a security token with economic rights attached to the performance of these co-working spaces and incubators? Then that by definition is an investment product. So whether or not you give it a digital token layer, you still need to comply with securities laws. And again, which securities laws you need to comply with is a function of where you are based in sort of the manager / broker of this investment opportunity, and also the location of your investors. So it's kind of a big question to give you enough answer to.
Thank you, Pooja. We have another question from John Aslanis. How much does it cost to apply for a license? How long does it take? Where is it applicable, locally or globally?
Yes, I assume you're referring to the Singapore license, which is CMS license, and the RMO license. I think the CMS license is generally the more straightforward one. I don't want to get into a discussion on numbers. We can take it up offline, but in essence, what you need help with is putting together the application pack, which is business plan, but also compliance manuals, etc., and then kind of submitting that to the MAS. And then if the MAS has lots of questions, then there's kind of the time costs of your lawyers or your compliance professionals helping you with that back and forth. So it's kind of just depends, how much, how intense the process is, and how intense the process is, again, it depends on the quality of your application. The RMO license is, I think, more out of the ordinary, I would say, because of course nowadays there are a number of platforms in Singapore which have gotten or in the process of getting the RMO license for trading of digital tokens, including famously DBS, the biggest bank in Singapore, for its DBS digital exchange. But I would say it's much easier to get it than say 4 or 5 years ago, when obviously the only entity I think which had this license was the Singapore Stock Exchange. but nobody sort of saw this privatization of the capital markets coming to the extent that it did. So I think that's just in terms of cost of process. And then if you do, sorry, I'm just trying to answer the question. It's a local license. So if you're carrying out the business of broking, dealing, and managing this token issuance and trading activity as a business for third parties, and you have a nexus to Singapore, or your business has a nexus to Singapore, then you would need that license in Singapore, and that license is only valid in Singapore. Unfortunately, there's no sort of passporting sort of construct like there is in the EU.
Thanks, Pujar. And I think there's another question for you. Where is the fine line of being SEC control versus not subject to such controls?
Yes, again, I assume you're asking this question in the context of security token issuance having a US nexus. So I think, like I said before, I think a little known fact is that every single capital markets issuance anywhere in the world actually has to comply with the US regs, even if it's to make sure that they're not falling within the US regs. So you have to make sure, as DigiShares is doing for its non-US offering, that you fall within this regulation and Regulation S in the US. And that Regulation S effectively requires you not to make directed selling efforts into the US. That's the technical term used in the regulations. What it means in practice is, some kind of common sense sort of actions, such as, don't go put big billboards in the US, don't, actively target US-based customers. I think those are some of the obvious things, but you also have to be a little bit careful because you can trip it up. You can trip up on this regulation accidentally as well. For example, you just happen to be passing through the US on a trip and you speak at a conference or you speak to investors. You could theoretically breach the Reg S exemption in those scenarios as well. So I think when you do a capital markets issuance through a token, then your International Capital Markets Council would sort of sit with you and give you this set of publicity guidelines, which basically sets out, the do's and don'ts that you need to be mindful of, because everything you say and do while your offering process is active actually can be scrutinized by regulators. So you need to be very careful, not just about what you say in the information memorandum, but what you say sort of around that as well. So I think, those do's and don'ts that you get, it's called a publicity guidelines, will make that fairly clear. And then your legal counsel would typically say that if there's a situation in which you're not clear on what you're supposed to do, then you just make sure that you contact your lawyer before you do that, because some of these things can't really be reversed once you've done them.
Thank you, Pujar. I hope that our speakers have already clarified your concerns. If you have any more questions, feel free to submit in the Q&A panel so that we can have it clarified during the fireside chat. We actually have one last question from Jaspreet Singh Brar. I need to tokenize my certified net zero carbon residential house in India. How do I tokenize and how do I find investors to buy those tokens? I believe that this question will be for the DigiShares sales team. So please allow me to contact you after the end of this webinar to have your questions clarified. I will be sharing with you some information and run the demo with you as well. So yeah, we will just move on to the next questions if there's any. So thanks, Pujar, a lot for your sharing. Last but not least, we have Sheshan, the CEO of Future Safe Group, will be sharing about the experiences and knowledge on the overview of tokenization in Southeast Asia. Sheshan, please. Hi, Sheshan, I think you're on mute.
Are you able to get me now?
Yes.
Okay. So I'm Seshan Krishnamurthy and I'm from India, currently stationed in Cambodia. and I'm running a company called as Future Safe Group. And 1 second, I think some camera is malfunctioning. Just hold on. Okay, so I'll just continue my audio. So I run a company here, Future Safe Group, based out of India and Cambodia. We have a US registered company also, which is an investment and holding company. And we have partnered with DigiShares recently, about a month back. And to tell you some background about my career and my interests, I've been a banker in India for about 15 years. And later on, I was into merchant banking. And currently, I'm consulting partner for a bank called the Zero Exim Bank, based out of St. Lucia. And they offer trade funding instruments, basically. And out of the curiosity that it offered on asset tokenization during the last 2-3 years of my interactions, because my bank also was considering to launch asset tokenization, but then it kept on getting delayed. And I had a primary interest in asset tokenization as a great means of alternative funding. And being a banker, I'm fully aware that the existing system of funding for the small and medium enterprises and small enterprises, as well as any non-traditional ways of funding an asset or any value addition product. So I took that as my prime focus to enter asset tokenization. And we have recently, about a month back, launched a complete website with asset tokenization as one of the prime offerings in our website. And we are in the process of integrating DigiShares, the white label software, and launching services for our clients worldwide. The interest came because of the fact that we have worldwide clients, because I do get lots and lots of marketing leads from my bank, as well as from my personal search engine optimization, marketing, digital tools. And we find that those who come for financial instruments also do start questioning about the routes and ways of achieving funding for either greenfield or startups or even developed companies. So that primarily is my interest in getting into this segment, and I'm very happy and proud to be part of this particular session. And I should thank the earlier speakers who have given a deep insight on the finer as well as technical aspect of this entire asset tokenization scenario. Let me jump into the presentation that I have. Let me try to share the screen now. Hold on. Are you able to see my screen?
No, we are not seeing it.
Hold on, please. Hold on. Beg your pardon. Just hold on, please. My laptop is.
All right.
Yeah, or otherwise I'll share it from my mobile, which is also.
Hi, Shashank. We actually have your presentation. Can I play it for you?
You have the slide, correct? Please play it for me. Thank you so much.
Yes. All right. Just give me a minute.
Yeah, there's some malfunction here.
Okay, everyone. I'm just sharing.
Yeah.
Yeah. Can everyone
Yes.
see? Can you see my screen?
Yes. Can you put it on the slideshow mode?
All right. Okay.
Yes. Thank you so much, and I'm sorry for the interrupted delay in playing this. Thank you so much for assisting. Okay, so I begin the presentation here with my group's identity, which is Future Safe Group. It's based out of India, Cambodia, and we have a US registered company. And I'm Seshan Krishnamurthy, CEO, Group Chairman of the Future Safe Group. Next slide, please. Yes. To be present in this conference webinar, and it's my objective to take you through the facets of Southeast Asian territory, the connectivities involved in the current scenarios of funding, as well as the parameters that are leading towards asset tokenization as an alternative way of funding. So these are the territories that are covered in the Southeast Asian region. We have Cambodia, where I am now. We have Thailand, Myanmar, Laos, Vietnam, Philippines, Singapore, Indonesia, Malaysia, and East Timor. So these countries are primarily under the interest of this topic. Next slide, please. Yes, I just would like to compare. I would just like to compare. 1 second, please. Yeah, please keep quiet. So there's a small comparison that I would like to take you through with the GDP of the respective countries, the comparison versus the population and per capita. Herein you see that you have Singapore as one of the largest in terms of the GDP per capita. In terms of population, of course, it's way below Philippines and then Thailand. Indonesia is a fairly large 267 million numbered population. But in terms of GDP, Singapore and then is the highest. The next in line comes approximately the Philippines, and then we have Malaysia, and then so on. So the parameters that are going to decide the asset tokenization are going to be based on the facts that these countries are exhibiting these characteristics, and which are going to probably be discussed in the next slides. Thank you. Next slide, please. Yes. While trying to talk about tokenization, it's very natural that we will end up talking about real estate, and real estate being one of the biggest market in terms of investments as well as the return on investments to most of the investors. I just thought I will take you around to this particular aspects of the real estate market in Southeast Asia. We find that manufacturing activities have always led to a boost in the economies in almost all the territories around the world. And primarily in Southeast Asia, Thailand, Malaysia, and Philippines have benefited out of the manufacturing facilities that have been created by the, let's say, some of the leading companies of the world. And this, of course, The manufacturing, of course, brings in the revenues and the earnings, and then ultimately resulting in real estate booms. And that, of course, had created the real estate boom in some of these countries. From the perspective of the country that I am here, Cambodia, the real estate investment into Cambodia is supposed to have risen by 20% during the last 2 years. And to talk about Indonesia and Vietnam, these are the emerging large players that will be attracting investors purely because of the kind of per capita as well as the population available. And Vietnam's GDP growth has been projected at 2.9% last year, and FDI drawn into the country was about $28.5 billion into Vietnam. So that's one attractive feature of this particular country, that Vietnam has been attracting investments because of the robust manufacturing base that they have. And finally, Indonesia had formulated something called as Omnibus Law, which is considered as the biggest regulatory reform since 1847 for a long time. And this has benefited foreign investors, and there is likely of huge demand which has been forecasted for real estate spaces, commercial as well as residential, or any other offerings. Thank you. Next slide. Just wanted to give an overview on a segment-wise, projection of what's happening. The transaction volumes are projected here, and transaction volumes are projected from 2012 to 2022. We see here that we have self-storage segment, cold storage, Australian pubs, Japan multifamily assets, tech data centers, student housing, and R&D life sciences have all been considered to be some prime segments that have been driving real estate volumes. Next slide. Well, where there is spending, there is good market, and the ability to buy as well as invest is definitely proven. And that is why I thought it might be relevant to post this particular slide, where we have projected and shown the retail spending in Asian cities, and which is expected to keep rising. And we find that Jakarta, which is from Indonesia, is the highest performing. And then we have Bangkok from Thailand, Manila, Philippines, Ho Chi Minh City, Vietnam, Singapore, Kuala Lumpur, and Hanoi. So these are the retail spending, let's say the characteristics which are defining, or which are going to define the ability for investments to be generated and diverted to segments that have been deprived of the adequate funding needs, which are actually the topic of this day. Next slide. Yes. While talking about an economy, we have had effects on COVID, which have definitely had tremendous impacts on all around the country, and travel was one of the major areas affected. Where there is less travel and where there is no cross-border travels, business investments do fall down, and that is one of the reasons why I thought I should project this travel bounce back slide, which has been proven that almost all the countries in the Southeast Asian regions have relaxed the travel, the pandemic restrictions, as well as the way in which they are welcoming visitors into their countries. Next slide, please. Well, to talk about in arriving at the tokenization topic to be taken up again in the next slides, I thought the adoption of cashless payments systems in all these Southeast Asian countries has been fantastic in terms of comparison. While even comparing Western countries, we have found that cashless payments have been adopted in a very large measure in all these countries. Next slide, please. Yes. Now I will just try and give you the financial inclusion gap, which probably is a strong indicator and a point here to asset tokenization funding to MSMEs, which is one of the deprived areas. Some of the key points that I would like to highlight are that out of these 10 countries in this Southeast Asian region, 11 countries rather, 6 of the countries are banked, underbanked, and unbanked. And I can vouch for the fact that I'm in Cambodia, and I find that the traditional banking offerings here are far, far, far from the advanced world in banking, and very difficult in terms of the ability of MSMEs on small and medium enterprises to draw credit, which they really need in terms of working capital or fixed capital, and for the growth capitals. So we found that a study highlights that 60% of the MSMEs have been deprived in terms of the ability to get a loan or funding when they badly needed it. The timing was very important. When they badly needed it, the banks are not there extending their hands for empowering them. And the other highlight point is that 75% of the population own mobile phones, and they are digitally empowered here in all these 10 countries. We find that mobile acceptability as well as digital empowerment and knowledge has grown widely. And a very important point is that those who are aged less than 30 years, is about 50% of the population is under the age of 30 and are considered tech savvy and are accepting online payment mechanisms faster than the West. So this points towards a culture that might pick up for accessing finance and funding through online offerings, and particularly, let us say, asset tokenization in the later parts. From the years 2018 to 2021, the Southeast Asian countries have been adopting, of course, digital financial solutions. And we have also had instances which have been highlighted where fintechs are growing in number who are offering solutions which are digital financial solutions. This probably will be tilting towards alternating funding sources compared to, let's say, rigid banking offerings and processes, which basically are hurdles in getting funded in these regions. I've really found when I stepped into banks here in Cambodia, I found that unless you give a collateral of about 150%, nobody touches a proposal in terms of the working capital or a fund or a fixed capital. So that gives credibility for my my point of view that this region is very much, prepared to accept and invite new forms of funding. And if asset tokenization becomes the order of the day in the coming years, I find that Southeast Asia may be one of the hottest spots of asset tokenization activities. And I find that it has a great potential in this region. Next slide, please. I can try and give you some trends in this region, which is in Southeast Asia. A few references I've tried to draw here, and how it has democratized real estate funding. I found in studying this entire segment that the global value of estimated real estate is $228 trillion. That's a mind-boggling figure, which I was not aware personally until I jumped into researching this topic. So it was fascinating to understand that this high volume of global real estate value is there. And it is also surprising that movies, arts, and non-traditional assets were also funded through asset tokenization. There was an example which I could draw that Andy Warhol and Claude Monet, whose paintings, I believe, were broken into thousands of shares and fractionalized and offered at $20 a piece per share. $20 per piece per share is such an easy and let's say an affordable a method of funding and acquiring a piece of the cherished art or whatever be the asset. And I found fascinating that at $10, $20, shares could also be bought, and small investors, even commoners, could probably be part of organizations later once the knowledge levels pick up. And I find also that in Southeast Asia, which is about the starting point was about 2017, I think that's what I could infer. And I believe it started with very poor quality assets. And that could be one of the reasons why the asset tokenization has not really boomed into an attractive segment, purely because once there is a success in a particular activity, it spreads like fire. So we've probably not seen the success rates in the way in which it should have happened. And that probably was the reason why the poor quality assets had damped the interest in the tokenization. But however, during 2018-19, try what may, the infrastructure and guidelines were found lacking. There was support systems were lacking. The government initiatives were negative and things like that. So until 2019, it was a dampening experience. But however, in 2019, there's a great, let's say, a point of positive outlook that Taiwan came in and launched the world's first STO laws in 2019, and probably that has become as a look to into formulating STO laws in other countries, and that I believe is Taiwan being very close to the Southeast Asian nations here. I believe that the Southeast Asian nations will pick up that string and start formulating STO laws and acceptability of tokenization in the countries. There's another highlight was the Thai Securities Exchange Commission also came up with their own contribution, whereby they have issued licenses to blockchain platforms. One of them was ERX, and it was the 6th platform in the Thai kingdom. And the projected volume of trade or the tokenization is about $1 billion, and the blockchain is believed to have been developed by IBM. So these points of interest could definitely enthuse many investors as well as the people who are interested in the tokenization market to jump into it. I think these will point towards a very positive outlook in the region. Next slide, please. Well, talking about Southeast Asia, we will definitely not be able to forget Singapore. Singapore is and the best Southeast Asian nation around, and the tokenization trends in this country have to be talked when we talk about Southeast Asia. So the Singapore, I think, is believed to be a trendsetter, which everybody may agree because of the fact that they have achieved huge number of success. And they have great mature policies. They have wonderful digital ledgering technical ecosystems, prevalent and diverse segments. And most important is the leadership is ever willing to bring in innovations into decentralizing as well as increasing the ways in which new techniques and new funding routes can be prevalent in their country as well as adopted. So Singapore is a great trendsetter, and they had a proof of concept originally by the Singapore Monetary Authority, DLT, and other financial institutions around in the country. And they had initiated basically a segment related to interbank payments via blockchain. So that is the earliest trend-setting gesture of Singapore and the steps that they've taken. It's also agreed that Singapore as a hub of trading has the best of laws and framework, which has actually been built over a period of time by the leadership, and this is believed to be suitable and to adopt to blockchain as well as asset tokenization. And I'm sure Singapore is probably going to drive the Southeast Asian market in a very big way because of the head start they already have. And of course, it has been corroborated by a gentleman named as Julian Kwan of Investex. He has been a very strong proponent of Singapore's asset tokenization initiatives, and he's predicting some big streams in the entire area. Next slide, please. Yes. Now, as we talk about tokenization, real estate automatically comes into play. So that's the reason I thought global real estate tokenization market should be brought in here. And what is the forecast? You can very well see in the screen from 2019 till 2029. It's a vertical rise in terms of the growth which is being projected. And when there is a global outlook which is projected to rise so high, I'm sure all regions, whether it be Southeast Asia or the South American market or any other markets, and I'm sure the global trend will always pick up in the other countries as normally it is done. when there is a success in another country, it is replicated somewhere else. So that's why this particular slide was brought in to give a forecast as to what's going to happen. Next slide, please. So finally, I thought let me give a small outlook on the global investment market and two of the players in this field now. The global commercial investment, particularly the real estate, was about $830 billion in 2019. I presume today we are at 2023, so it should be at least double that size. February, the foundation, which had organized a challenge for tokenization activities and initiatives. They come out with some brilliant ideas whereby they rewarded $150,000 worth of asset tokenization software and the backup by offering the first 3 winners of that particular challenge rounds, which they had hosted. Key players, of course, DigiShares is, of course, our prime partner. So in my view, DigiShares is my cup of the cake. There are other players, BlockSquare, NetGo, Slice. We have Consys, Codify, Blockchain Factory, Somish Solutions, Gotten, and Smart Reality. But I must say and admit that I got drawn into DigiShares because of the kind of interactions and the easy way in which we were able to interact and come to a final signing of the white label software acquisition. So DigiShares is my baby for the growth and the adoptability of the entire technology. Segments which have been covered probably in the asset tokenization and investment market will be commercial, there'll be residential, single real estate, property real estate, and tokenization. So these are some of the highlights of the investment in the real estate that was happening and what could probably be happening and who are the players. Next slide, please. Yes. Finally, I think I'm almost coming to a close of the presentation with 1 or 2 more slides. The ecosystem that's existing, that I think is a very prime factor that probably will drive growth. So that's the reason why I thought I would highlight a few points. Singapore, of course, is by far the most advanced and well-prepared country, which everybody would agree here. As I told you earlier, Thailand has shown the initiatives and the willingness to back up blockchain. And of course, $1 billion of assets are being tokenized. A mandate has been given. Potential countries could be Indonesia, with a huge 267 million population, Malaysia, Philippines, Cambodia here. Because Cambodia, primarily because huge Chinese money is coming inside this country for real estate. I can see everywhere buildings coming up and projects going on. It got stopped during the COVID, but then I find that the activities have picked up and there is huge number of travelers coming into Cambodia from China as well as other countries. So I find Cambodia could be one of the sleeping giants, and that's the reason I'm positioning myself here. Because the fact that the banking is very rigid here, and that gives us the best chance to succeed in asset tokenization. That's the reason why I putting my eggs in Cambodia basket. And Cambodia also had a initiative taken in NFT marketplace, whereby there's a organization called a ZI Financial, where they offered the first tokenization blockchain-backed real estate funding here. To sum up, and finally, I need to talk about my group now. Is that FutureSafe Group has been planning this asset tokenization in partnership with DigiShares, and we have set our foot in Cambodia. We plan to expand to Thailand, Indonesia, and Vietnam. By virtue of my one of my companies in USA, I plan to, of course, start building into that location advantage and offer in USA a little bit. There are a huge number of players there, but we are setting up some small targets there. And the governance and licenses, of course, will be a great point which all the governments have to pick up and encourage. As long as there is transparency in a country's management of the GDP and how they can increase it, I think they will all realize soon that asset tokenization could be one of the most important aspects. Next slide, please. Yeah, these are some of the targets that we have fixed: Cambodia, Thailand, Indonesia, Vietnam, India, Africa, USA, and GCC. These are some conservative targets. We consider it possible purely because we are into trade funding instruments, and huge number of inquiries come to us automatically, and they fall back into funding requests also. So that's the reason why we feel if properly handled, we might be able to handle these market achievement. And on the right side, we have shown our website screenshot where we have put in DigiShares and the real estate page where we will be offering tokenization. Next slide, please. Yes. So thank you so much. It's my great and warm thanks to all of you for giving a patient hearing and also offering me the chance to be part of this webinar. So on the right side, we have the website screenshot that just shows that we are giving a lot of importance to funding through asset tokenization. Thank you very much, and God bless. Thank you very much.
Thank you, Shashank. We have a number of questions here. Okay, so we have another question from John.
Yes.
Yeah. Do you believe?
Is it John's question you're taking or some anonymous attendee?
I have a question from John.
Okay, please tell me. May I have a look at it?
All right. So, do you believe that debt financing can be tokenized and have good potential in Asia as growth capital?
Oh yeah. Okay, that's a fantastic question, John. I think as a person with an advantage of having been a banker myself, so I think I can address this question in a small and but descriptive way. It's a fact. It's a fact that debt financing is very rigid in terms of the bankers' policies and processes. It almost entirely or is entirely structured around collaterals, and the collaterals are rare in numbers because every company is growing and they have limited ability to be able to provide that kind of collaterals to secure all the debts that is coming into the company. And what best alternative can be there when there need not be a collateral other than the primary asset that is being intended to be created. So there's a new collateral coming up, the asset that is being created, which is a primary security, where it can avoid the need for a collateral coming in place. And with a company in a growth phase, it will be to the advantage of the asset tokenization investors who will actually participate in the growth phase of the company rather than in the earlier trends and business results of the company. So I fully believe that in debt financing also asset tokenization will definitely come in as a very handy tool. But of course, the education part, to the companies themselves as well as to the players has to be focused, and we need to definitely take these type of webinars to very higher number of audiences as well as the corporate world. And I'm sure that with the kind of primes, let's say high street bankers quitting out of many segments of funding, which is like trade funding, there are prime banks quitting out of it. Debt funding, they are becoming choosy. They are trying to only go into the high earning potential markets as well as the assets. And that means there is definitely going to be a deprived segment where debt could be difficult to source because people are exiting. So this is my answer to John.
Thanks, Shashank. We have a lot of questions for you, Shashank.
No problem. Always a pleasure.
We have another question from Dolly. Are you operating here for the tokenization of startup funding for incubators, accelerators in India, also for the real estate or co-working center in India?
Oh yeah, okay. Mr. Dolly Basan, thank you, namaste. As we said, we jumped into this tokenization about 1.5 months back, but because of the virtue of my banking background, about 15, 20 years of experience in the entire commercial funding and the credit portfolio, I have a fair idea that India is going to be a great market. But the fact is that India, at the moment, with the current government and the finance ministers take on the crypto market and the acceptabilities, we could face some governmental challenges. But however, we could probably circumvent in a very legal framework way. We could form SPV companies for your, let's say, even if it's a startup or a regular company. We could create an SPV in a country where the crypto and the STOs are accepted and legally welcome. And that company, as a holding company, could pump in the money into the Indian companies. I think we have to be smart in circling around government guidelines and governance as well as loopholes, which could be a perfect way. Your chartered accountant should help you to find such a mechanism. I'm always available to consult offline, or please visit my website, which is www.futuresafe.group, and please reach me. And I think I have fair idea as to how we can help you. But I think it's a little premature to talk online here. But please do come offline. I think I should be able to address your needs. We will find a problem is always a problem, but we are here to solve problems. So I think I'm having an open mind on that. Thank you very much.
All right, thank you, Seshine. We do have a few more questions, but it's more towards DG shares. So I think I will be handling on this question. After
Okay.
the webinar, yeah, I'll be writing to the attendees myself because it's like a series request.
Okay. Thank you very much.
Hi, Yapi. Sorry, can I just quickly add to the response that Seshan made on finding a cross-border structure. So I think again, to reiterate what Seshan said, I'm sure it is possible to kind of slice and dice the specifics of your deal to find the right structure, and it may well mean that your token issuer has to be set up outside of your home jurisdiction. But whether that makes sense in the context of your structure comes down to exactly what commercials you want to achieve, where your target investors are, and also more nitty-gritty things such as, say you set up in Singapore and your assets are, say, in Dubai. What's the most tax-efficient way to move the proceeds of an STO offering from Singapore to Dubai or wherever else the assets might be based? So I think all of these things will have to be worked out specifically for your tax situation.
Thanks, Pooja. Seshan, I have another question for you.
Okay.
Anonymous attendee asked, how do you intend to handle the KYC requirements of secondary trading of the token?
How does it intend to handle KYC requirements in secondary trading of the secret? Okay, I have to be frank in understanding as well as accepting that KYC vis-a-vis the regulatory framework and the authorities that they drive the needs for the KYC. I think we really are in a let's say a startup stage whereby all these hurdles how to be handled or overcome. We'll have to work with the experts. I'm a non-expert in terms of laws, but however, KYC primarily is normally given prime focus because of the fact that the tax evasion and money laundering aspects are very highly respected topics around the world. I think we should be able to overcome that when the governments or any segment of industry sees successes happening around with as tokenization, and that'll be the rush. So I feel that players who have come in early and people like us who are all putting our minds together to achieve some sort of a way forward. I think it's our duty to bring successes to the projects that we take up. The asset tokenization happens successfully, and then that sets the trend for other people to follow. And then I think there'll be relaxations as well as guidelines being loosened up. All things should happen. That's how normally a government should function, whereby when they find success in some place, they're replicated by looking into their own processes and policies and come out with new guidelines. And I'm sure it should happen as we progress. That's what I think I can offer at this moment.
If I can just add to that, as far as AML and KYC is concerned, I think regulators these days don't agree on much, but it's one thing that they do agree on is the fact that AML, KYC, sanction screening is pretty much non-negotiable, particularly for cryptocurrency transactions, but certainly for an investment product transaction which is what a security token, the purchase and sale would definitely be. I think there's a little bit of a challenge because in different jurisdictions have slightly different thresholds for what is the extent of AML, KYC sanctions checks that you need to do. But I think, led by the Financial Action Task Force, I think those standards are all convergent. They're converging to a higher, they're gradually converging to a higher standard. So while that will mean that these compliance obligations will be onerous for a while, ultimately you won't have to sort of figure out, what's the KYC you need to do for an investor from country A versus country B. So I think that's just one sort of macro point that I would make. And I think, again, sometimes I think in this security token context, you have to kind of have in a trading context, trading platform context, you really have to, there's no way to get around having a closed loop system where all the players in that trading system have to be pre-verified from an AML KYC perspective. But again, bear in mind that AML KYC is only part of the compliance journey. What you also have to do is what's known as transaction monitoring, which is to make sure that the kind of transactions that a particular person does aren't sort of inconsistent with the kind of transactions they've done in the past, because that leads to the assumption that effectively they're doing something dodgy. And so that again is a red flag from an AML KYC perspective. So AML KYC isn't just something you do at the start and then forget about it. It's something that is a real risk that you have to cover off as a legal requirement pretty much anywhere in the world. So I think that's just something to keep in mind.
Thank you, Pooja. Sheshan, another question for you. Kennedy is asking, as the real estate practitioner in Nigeria, he's hoping that what's happening in terms of this in Southeast Asia could be done here. I mean, I think it's assuming Nigeria, Africa. What could real estate be doing in that perspective?
Okay, Kennedy. Okay, Mr. Kennedy, thanks for asking this question. I have been interacting in many African countries because of the fact that I represent one of my banks, that I'm a very senior consulting partner, and we get huge amounts of trade funding instrument issuing requests. Parallelly, when our search engine optimization works and the marketing leads come up, there's always a secondary question coming up as to whether funding could be provided, because they are lacking either in terms of project funding or working funding, or in acquiring equipments, or in terms of taking up a government project with sovereign guarantees and things like that. As I have mentioned in my projections in the last but one slide, I've given Africa a prime place, because Africa is where I believe the governments and the financial systems are probably evolving. They don't have that strong, let's say, guideline as governance in terms of preventing these types of activities from flourishing. And I feel that Africa being very rich in resources as well as in terms of real estate, the extents and areas, vast areas that are still available for exploitation. And I'm feeling that it actually would be more easier in Africa than any other countries. I really have a positive outlook, and I have to probably give a, let's say, a happy news for both DigiShares, because they are our partners, is that I have virtually been interacting with African companies, and I have two companies and two countries whereby a government project with a sovereign guarantee offering has been offered for asset tokenization to us, because of the fact that they are not able to find the receptivity from the regular players and the banking as well as investment segments, with all the scams going around, with SBLCs floating around, people asking for SBLCs, monetizing, purchasing, leasing, all these things are bullshit. What happens is that most of them are scams, and these guys come out and they're really looking out for genuine ways in which this could be done. And I felt the chairman of this particular company, for a $5 billion project, they found us credible when we talked to them and we offered this solution to them. So this is one pointer to be happy about, that real estate tokenization in Africa is really going to be flourishing, and many people will come out with such requests, and it's the duty of players like us and many other companies who are going to be in the same industry to jump into African countries and offer the solution. Thank you.
Thank you, Shishai. We have a question from Rahar. I believe that you're asking for legal or marketing help from DigiShares apart from the technology part. So I would like to answer this question. Although we are actually just a platform provider, but we do have a legal counsel that can help you with some quick legal consultations. It's definitely not something like, but we do help you to some certain extent. You can write to us and be specific more on your questions on what kind of legal or marketing help that you require from us to be able to help you in certain extent. As for the marketing, we do not provide the marketing help, but we can actually share with you some of the marketing agencies that our existing clients are using. So hopefully that can help you as well.
Hi, Yapi. Sorry, could I just jump in on one other question that I saw earlier on, which is about tokenizing without creating a security token, and I assume that what the question was alluding to was all this buzz around real estate being packaged as an NFT, and I just wanted to make a macro comment here, which is that I know the one-off transactions have been conducted, and certainly they do offer some process efficiencies as compared to physically doing a property sale, which is probably one of the most labor-intensive tasks from a legal perspective. But I think it's important to just bear in mind that if you are really running a business of dealing in investment products or brokering sales of investment products, or creating a secondary market for those investment products, then it doesn't matter what you call it. The capital markets regulator is going to look through to the substance of the transaction. So I think just bear in mind that if it smells like a security, it's going to be treated like a security. So just repackaging something as an NFT may not be the answer to at least the legal and compliance work that you need to do for a security token offering. Thanks.
Thanks, Pooja. We have another question from Mali Mela from South Africa, asking whether futures have a footprint in South Africa.
Okay, Mali Mala. Thank you for inquiring. Actually, we have this project that I was talking about, where a large project has come to us. That's in Zambia, so which is very close to South Africa. So we already have plans to set our footprint in Zambia because we have this particular project in mind, and so we are very close. I think we have our one of my persons stationed in Zambia, and I do have one more person in South Africa who could probably set up a meeting. We could probably request for a Zoom meeting or online meeting, and we can definitely come out with an answer as to how we can help you.
Thanks, Shashank.
Yeah.
We do have a question from Tapelo, but I don't think that I'm reading the question right, because yeah, I mean that I think there's no question content. If you don't mind, could you please just rewrite your question in the Q&A part and you clarify? Since we don't have any more questions, we just move to the fireside chat.
Yeah.
Okay. If you have any more questions, feel free to just drop your questions here. Okay, so I do have the first question about the main challenges with the real estate tokenization in Asia. So we'd like the speakers to maybe help us clarify these questions. What would be the main challenges or problems when people want to tokenize their real estate projects in Asia? Jar, would you like to answer this question, please?
Sure. So I think, it's a little bit of mix of, I would say, market / legal factors behind it. One is obviously, as you know, the whole sort of issue with security token adoption has been that there just isn't enough liquidity in the secondary market. So that's kind of created a bit of a chicken and egg situation. People don't want to do security tokens because there isn't secondary market, and there isn't secondary market because there aren't enough security token issuances. I think there's just that kind of macro feature relating to the global adoption of security token, which is prevalent in Asia as well. So I think that's I think one factor to keep in mind. And I think the second factor is just again elaborating on what I said earlier. I think people sort of tend to underestimate or misunderstand the legal characterization of security tokens, just because it's about sort of democratizing access to the capital markets, which is sort of the marketing speak. I think people just assume that it means that there's a way to sort of shortcut securities laws, which unfortunately there just isn't. And I think the particular challenge in Southeast Asia is, if you're doing a cross-border deal, you have to figure out a number of cross-border issues when you're doing the structuring and the offering. So if you're doing, say a deal with Indian real estate assets with a Singapore token issuer, then again, how is kind of fund flow going to work from a taxation perspective? If you're doing, say, a PRC deal out of Singapore, but you want to take payments in crypto, then how's that going to work given cryptocurrency isn't really considered legal in the PRC? And then I think the biggest question in all of these asset-backed deals is how you're really going to ensure that investors have access to those assets in an insolvency meltdown scenario, which is the whole point of doing an asset-backed deal in the first place. So those are, I think, just old school questions of cross-border finance deals, and they're just somewhat amplified in the context of digital token issuances, because I think we're seeing sort of a bigger mix and match of jurisdictions, just because we are, casting the net wider in terms of assets, and also because some of the assets themselves are, just not traditional assets. It's not easy to, for example, create security over a piece of art, or say a barrel of wine. as it is to say have security over shares in a company. So how are you going to kind of package that in a cross-border context so that ultimately the investor has access to the asset in Meldan's value? I think it's just thinking through some of those issues that gets people stuck. And I think the takeaway is that all of this is actually figure outable, as long as you just don't automatically assume that it's going to be very easy just because it's digital.